While everyone watched the price, a handful of corporations moved quietly. They bought a massive slice of Bitcoin, the asset built to escape them. This isn't just adoption. It's a quiet power shift that could rewrite Bitcoin's future. We were told corporate buying was the stamp of legitimacy, rocket fuel. But the dust is settling. Now we're seeing the cost. Influence pooling in boardrooms, not in nodes. What if a few executives bound to shareholders and regulators can move the market or steer the network? Institutions didn't knock, they kicked in the door with cash. Public companies, private companies, and spot ETFs together now influence a meaningful chunk of supply. With ETFs, investors own exposure, but not keys. Issuers and custodians do. Convenience, concentrated power, right where Bitcoin was meant to resist it. History rhymes. Gold was centralized by law. Bitcoin can be centralized by custody. Leverage tied corporate treasuries to the Bitcoin price. On the way up, it's a flywheel. On the way down, it's a cliff. Forced selling doesn't just hurt one stock, it can cascade across the entire crypto market. And regulation pressure doesn't target code, it targets CEOs. One company reframed corporate treasuries. Swap melting cash for Bitcoin. Then raise capital with stock and notes to buy even more. A feedback loop emerged. Demand leads to price appreciation, which fuels more demand. Brilliant financial engineering and a single-point dependency on Bitcoin's price. Spot ETFs open the floodgates, one-click access, institutional rails, but those coins sit with a few highly regulated custodians in a fork or protocol fight. Who effectively votes those coins? Not millions of shareholders. A handful of issuers and custodians become de facto kingmakers. Now link the systems. A corporate balance sheet crisis forces Bitcoin sales, and the price drops. That price drop triggers ETF outflows, which forces custodians to sell the underlying Bitcoin on the open market. Selling begets selling, a reflexive spiral. The stability of Bitcoin's market is now tied to the stability of a few US corporations. That's the opposite of why Bitcoin exists. Institutions brought liquidity, legitimacy, and risk. But protocol rules aren't enforced by CEOs, they're enforced by nodes. The best defense isn't outrage, it's participation. Run a full node. Hold your keys. The more coins in sovereign wallets, the less power centralized custodians hold. Is corporate adoption the validation Bitcoin needed, or a compromise that hollows out its soul? The price will swing. The real question is control. And that answer isn't decided by them, it's decided by us. What do you think, validation or capitulation? This is Reese from Powerful Individuals saying thank you, and if you found this useful, drop your take in the comments. Subscribe for deeper, data-driven breakdowns. Run a node. Hold your keys. Defend decentralization.